Hello, my name is Trevor Damian. I am the president and founder of CLS CRE. We are a commercial mortgage brokerage based in Los Angeles, California, providing commercial real estate loans on a nationwide platform to investors, developers, and owner users of commercial real estate. We finance an array of product types utilizing capital market resources such as life insurance companies, debt funds, banks, credit unions, CMBS, and agency. When seeking financing for our clients, we create a marketplace of lenders to compete for their business, ensuring we deliver the very best terms and conditions that align with their financial goals. The yield curve is used to predict future interest rate changes, economic activity, and can indicate how investors feel about risk. Our current Fed overnight rate is between 5.25% and 5.5%, causing the short end of the yield curve to be high relative to the long end. The 5, 7, and 10-year bond yields are relatively flat and have dropped 15 to 20 basis points in 1 month, driving interest rates lower across those fixed terms. The Fed's dot plot is a chart updated quarterly that records each Fed official's projection for the central bank's key short-term interest rate, the federal funds rate. The dots reflect what each U.S. central banker thinks will be the appropriate midpoint of the Fed funds rate at the end of each calendar year. In the report released in March, we can see that most of the Fed officials are projecting a 4.5 to 4.75 rate for 2024, which would be a 50 basis point to 75 basis point drop from its current, and 3.5 to 4% range for 2025, and even lower in 2026. It should be noticed that these numbers have shifted up since our last report in January of 2024 due to economic data pointing towards higher inflation persisting within the economy. The Fed reviews economic reports such as the PCE and CPI report to influence their decisions on rate modifications. The PCE index rose 0.3% in April in line with forecasts and following a 0.32% increase in March. Core PCE rose 0.2% in April below forecasts, a 0.3% increase after rising 0.32% in March. The bond markets had little reaction to this data. The Consumer Price Index report rose 3.4% last month from a year earlier. Core prices, which exclude volatile food and energy items, rose 3.6%. These numbers were also in line with economics expectations and have little effect on the market. The S&P 500 is at all-time highs, gaining 13% year to date. The 10-year bond yield pulled back 15 basis points from a month prior, creating a downward trend. And the Dow Jones Industrial Average recently hit an all-time high, but has retreated since last month. Bitcoin recently hit an all-time high, breaking through 70K since the approval of a Bitcoin ETF. Until next month, invest wisely, be fiscally responsible, take care of yourself and each other.